Well, while the market continues trading sideways, if we look at the year-to-date performance for the NSE 20 share index, we've seen a gain of just over 25% having filtered through thus far. So quite strong move higher that we've seen, given that the climb has been steady and paced though. What's your outlook for the market from here on out?
Well, we saw a significant decline in foreign trading activity, and I think with the locals now jumping into the market, which is actually what is holding up the market, we are seeing that I think the foreign investor is seeing a level of political risk at the moment with the referendum coming up, and we do expect that they'll feel a little jittery until we know how the referendum is going to play out or how the political front is going to play out. But fortunately for the market, the local investor has been very active, and we saw about 78% of activity yesterday being locally driven. I hope that this will continue to be so, and that local investors will continue to put their money in the market. I think that the fact that we've seen lower interest rates has affected the fixed income markets to a certain extent, especially with the short-term papers. But I do feel that it's going to continue to be robust as well.
Well, if we look at some of the stocks that stood in the spotlight, we had National Bank of Kenya, one of them. It traded cum bonus, with shareholders getting 2 new shares for every 5 that were held. National Bank closing 29.2% lower. That actual price, though, fell just over 5% when accounting for that bonus. We've now got that share price sitting at 37 shillings 50. Still reflecting a dilution concern due to that 2 for 5 bonus issue. I mean, what's your view on the impact of this bonus issue?
Well, the bonus was primarily to clean up their books. They've got, they had quite a large shareholder premium on their books, and they wanted to clean that out, and that's the reason they did that bonus, so that those shareholders who had bought shares at par would, you know, they'd get the shares before they actually do their privatization. And although we have seen the NSSF and Treasury having a bit of, you know, pulling each other regarding that privatization, I think they're cleaning their books, they're getting ready for this privatization, and NBK has done quite well in the recent past. They've actually come back into profit, and we do expect that since investors are expecting them to begin announcing dividends after a very long time of non-payment of dividends, that there's going to be a bit of positive sentiment towards the stock.
Well, some have been saying that the reaction that we have seen the stock receive has been a bit premature, given that detail is still lacking, and that the government plans to privatize this stake in NBK is a step in the right direction. In the meantime, CMC rallied 1.2% in yesterday's session. It traded below 10 when it issued its profits warning, and has rallied more than 25% since that warning. What's igniting or reigniting interest in this counter at the moment?
Well, CMC doesn't have a very big shareholder base, but at the same time, it does benefit a lot, especially when we have a lot of investment from the side of the government. Don't forget that CMC has been selling a lot of the cars, the new cars, the Passats to the government. They've been selling a lot of the Land Rover to the CDF. They've been selling a lot. The tea industry, actually, most of the bodies for those trucks that carry tea are actually from CMC. So CMC does have a very good you know, on the market. It has the effect of the economy. Whenever there's a good turn in the economy, CMC tends to benefit from that. So I believe that that's what investors are seeing, and that's what they're reacting to.